mind. Mainlining options like nicotine. Every strike price feels like dopamine. I don't hedge, I confess, I impress my stress by shorting my health just to flex success. I'm a bull in a china shop full of bears. Margin calls turn into answered prayers. Charts look holy when the candles glow. I baptize myself in the after hours flow.
I'm lit off liquidity, baby. I trade faith like it's certainty. Fuck, money talks louder than therapy. Green bleeds beautifully. Maybe I'll crash, but for now I'll fly on wings made of leverage and lies. Ghost my friends for the future's trade. Every missed text is another upgrade. Risk management, nah, that's fear in disguise. I'd rather die rich than play it wise. Broker says I should slow it down, but adrenaline feels like a dividend crown. Even my heartbreak charts parabolic. Love's a loss, but the profit's symbolic. I'm lit off liquidity, baby. I trade faith like it's certainty. Fuck, money talks louder than therapy. Green bleeds beautifully. Maybe I'll crash, but for now I'll fly on wings made of leverage and lies. I'm lit off liquidity, baby. I trade faith like it's certainty. Money talks louder than therapy. Green bleeds beautifully. Maybe I'll crash, but for now I fly on wings made of leverage and lies. I'm lit off liquidity, baby. I trade faith like it's certainty. Fuck, money talks louder than therapy. Green bleeds beautifully. Maybe I'll crash, but for now I'll fly on wings made of leverage and lies. Hedge my soul at a discount rate. Hope the world would subscribe, but they showed up late. Every word I pitched was a junk bond bet, and my silence matures with compounding debt. Tried futures trading on who I'd be, but the contract expired, left a hole in me. Options were priced at a life I missed, and I keep rolling losses that don't exist. Hedge my faith with caffeine and sin, but the spreads got wider. I can't break even. I'm just a ticker lost in after hours, trading shadows for borrowed power. Short on patience, leverage on doubt, waiting for a circuit breaker to pull me out. Mark to market, all the ghosts I owe. This portfolio of pain won't
What up, dudes? What up, duties? All right, let me get that pause for one quick second.
What up, dudes? We have a lot to talk about this morning. I had to let that run a little bit longer because holy guacamole, Batman. The market apparently not liking what played out over the weekend because we are getting clapped early this morning. The SPY currently down 1.16%. NASDAQ down 1.6%. You have the Russell down 1.5%, and Bitcoin is actually kind of break even, but chilling just below 110,000. Things are rough. They are rough. Make sure you put on your fat Barney purple shirt. Make sure you put on your red sunglasses so you don't damage your eyes today. As you just heard, shout out to Chaos. Obviously, that song, and actually even the first song we played today, those are all free. Remember, Tendies and Tunes, you could get that music 100% free. So if you like what you're hearing, it's in the description of the video. And it sounds like we're going to be listening to some of those sad, bearish songs today. If you saw the show on Friday, if you saw the newsletter over the weekend, if you saw the update video yesterday, you know across the board, there's a good statistical chance that the local high is put in. And when I say the local high, I'm basically referring to what we saw on Thursday, the 28th, because right now we're getting into this danger zone. And in fact, depending on how you really chop it up, you might argue that we've already cracked the danger zone, not holding 6,400. So if this does not hold, do not be surprised if at some point this week we are talking about 6,300 based on all the options positioning. If this doesn't hold, there's not really much to catch it. Granted, some trades have been coming in a little bit earlier this morning. You can see that there's some support at 6,325. There's some support at 6,300, but there's also some aggressive downside plays to 6,350. So if you're looking at this right now and thinking, all right, I know overall we're in a bull market, like it's probably going to be bouncing at market open. Of course, theoretically it could, because we do now have an upside gap fill to the low from Friday, but there is quite a bit going on underneath, and the positioning, shout out to Spot Gamma, by the way. If you want this flow patrol, you get free access all the way up until September 5th. This is your final week for free access. This is by far, second to none, the best options analytics tool you could possibly use. And this is proof right in it that from Friday, basically they crunched all the numbers, put it into their fancy schmancy models, kicked out the results, and you could see extreme NVIDIA volatility, Tesla bearish delta, SMCI negative exposure, VIX protection buying, and index bearish bias. This was all posted obviously before the market opened, and you could dive into the numbers and see the positioning, the strikes, the expiration. But the TLDR here is the newest options positioning is bearish. And why I'm particularly concerned is because not only do we have that bearishness, but now we have a price structure where, okay, this could just be a local high, like local high, local high. So we're putting in potentially a high. And even though on the daily chart, we have quite a ways to go to snap the 50 EMA all the way down to 6,300, which is theoretically in play today. That's a bit farther away. But then when you look at the smaller time frames, the 5 minute, the 10 minute, the 30 minute, and the 4 hour, they already all broke it. So from a price structure standpoint, we have a local high. From a price momentum standpoint, everything is breaking down. And from an options flow standpoint, we've seen a clear shift from last week from bullishness in the options market, call dominated, aggressive calls, a lot of positive gamma support underneath, to now a whole new repositioning for one reason or another being spurred by that PCE report that we got on Friday to conclude the week and the month. And now all of a sudden, just like that, things have switched. So with it, just because we see blood in the water this morning, is this a guaranteed sell-off, cataclysmic crash? No. Same thing as when you're absurdly green in the day. We've all been here together when we've seen multiple examples of it looks really good or really bad in pre-market, and then it's completely switched throughout the trading session. But on the flip side, we also have a lot of examples of, no, we had a clear movement and then the market kept going that way. So my point in saying this is that just because we see something right now, not really guaranteed of what's about to play out, those odds are still going to basically be 50-50, which is why throughout the day, obviously, we're going to be checking back in on the options for the Mag 7 individual equities, obviously the overall market. We're going to be checking in on these key gamma levels. But right now, This is crazy. This is actually like a real legit insane move we have going. So let me kind of break down, and actually I can't see the best with this. I put these on just because for the show, I'm an entertainer at heart. And also I just didn't want my eyes to get damaged by all that red we saw early this morning. Stock futures fall to start September, trading amid new uncertainty about tariffs after court decision. So on Friday, the news that really stole all the spotlight related to inflation, the PCE report coming in at expectations. A little bit of a side note, there are commonly less surprises when it comes to the PCE rather than the CPI report. Those are two different types of inflation reports if you don't know what they are. But in terms of how often are forecasters wrong, generally they're more wrong on CPI rather than PCE because the PCE commonly comes out after the CPI. And then since we already have the CPI numbers, that means they could put those new numbers that we just got into the new equations for the PCE. So generally it's easier to forecast that, but just a little bit of a, I don't know, tangent there. Anyway, we got the PCE report on Friday and it came in at expectations. Market capped up at 8:30. We were looking good. Market actually opened at 9:30. First half hour, we sold off and basically did nothing for the remainder of the day. We sold off the first half hour and then flat. Sold off the first half hour and then flat. So in terms of actual movement, nothing too special after the opening session, and everyone just basically from there went into the holiday weekend. But as a bunch of this nothingness was playing out, we did hear something very interesting. Stocks fall as rising bond yields worry investors. So why is this going on? Well, it does relate to the trade war, which we haven't really talked about that much lately. U.S. trading partners dazed and confused after tariff court loss. This all once again happened on Friday, and then the story itself, the narrative, has been developing throughout the weekend. Trump tariffs that are voided by and ones that are safe from Friday's appeals court ruling. So remember, I am not a lawyer. I have watched most seasons of Suits, so I'm probably well equipped to comment on this from a legal perspective. Obviously, like I haven't finished every season of Suits, but I got the general gist. Like whatever, he married the chick, she became a princess, and then there's a redhead, and then there's the boss who left. I don't know. I feel like I'm basically a lawyer. The ruling on Friday from the U.S. Court of Appeals for the Federal Circuit throws a wrench in President Donald Trump's trade agenda and leaves his reciprocal tariffs in limbo. Trump has said that he will appeal the ruling to the U.S. Supreme Court. So here's the major TLDR. Trump's sector-specific tariffs, including on copper and steel, remain safe from the ruling, potentially foreshadowing a new trade playbook Trump could use if his reciprocal tariffs are blocked. So generically, these reciprocal tariffs, apparently they might not be legal, which I didn't even know that a judge could do this. I thought the president kind of could just decide what the tariffs are because he's the president. Anyway, the Treasury Secretary Bissett expects Supreme Court to uphold legality of Trump's tariffs, but eyes Plan B. So this definitely, as that article referred to, throwing a little bit of a wrench into the situation of like, so what tariffs are above board, what tariffs are below board. Honestly, going into Friday, I didn't even know that a judge could tell them to not do this. So there's a interesting narrative developing here from the legal front. Obviously, today for the remainder of the week until we get, I guess, a ruling here, this is going to be an important narrative to pay attention to. On top of all that, we have other political drama. GOP faces headwinds on push for second big tax and spending bill. House Republican leaders face challenges in pushing for a second major tax and spending bill this year to meet fiscal conservatives' demands for deeper federal budget cuts. The new bill could revive provisions left out of the previous $3.4 trillion, not milli, not billy, but trillion package, and cut federal benefit programs such as Medicaid and food stamps even deeper. Doesn't sound the best. It's unclear what could induce moderates from competitive districts to support more cuts to safety net programs, and Republicans so far lack a unified vision for the package. So basically, overall, it's running into some issues. So this is another thing that we might be paying attention to. So those are the larger things of maybe what you missed on Friday. Obviously, maybe you started your weekend early, and if you did, massive congrats to you. And if you did it and you slogged through the market, well, I hope you survived. I definitely blew out a couple of my SIMDA-funded accounts. But anyway, I hope you had a great weekend, whether you did or didn't take off Friday. Market closed yesterday in observation of Labor Day, and now we're kicking off a whole new month. And yes, I want to get into the seasonality, those nerdy-ass stats, facts, and figures of the month. And it's actually one of the most, well, it's not one of, it is the most bearish month of the entire year from a seasonality standpoint. And I want to get into that. But first, you got to know what to pay attention to really this week. So obviously today, we skipped yesterday, Monday, September 1st. Today, the 2nd, we're going to get some manufacturing numbers at 10 a.m. And it just got announced, I believe, either early this morning or late last night, that President Trump will be speaking at 2 p.m. So I'm going to get into that in a second. But overall, remember, the first calendar week of a new month is where you get all the jobs numbers for the previous month. So for example, tomorrow, Wednesday, we're going to be getting the JOLTS job openings. We're going to get some non-manufacturing PMI and prices. And then on Friday, this is going to be, in terms of major macroeconomic data drops, Friday's the big day where we're going to be getting the unemployment rate, once again, an hour before the market opens. So pretty much every day for the remainder of this week, we're going to have some form of data that you should probably be paying attention to. But let me quickly rewind to what our expectations are for today. And the president breaking Trump to make an announcement at 2 p.m. Eastern. And it's from the Oval Office. It's thought to be related to the Defense Department. So I don't know if this one, like my base expectation isn't anything related to the trade war or anything like that. But once again, President Trump either being announced early this morning or late last night, 2 p.m. Oval Office, and they believe it's going to be related to the Defense Department. So I just want everyone to pay attention, especially this afternoon, if things get a little bit crazy. Wouldn't be surprised if he talks about the Fed fund rate. So even when he has these talks seemingly related to something else, a lot of the times these reporters say, hey, like, what do you think's going on with Lisa Cook and Jerome Powell and monetary policy? So with that, remember, this month is an FOMC meeting. Not this week, September 17th. Set an alert, mark your calendar, do whatever you need to. But September 17th, we will be getting another FOMC decision. A Federal Open Market Committee will be deciding basically that we're going to get a 25 bips rate cut. Currently, we are sitting at a federal fund rate of 4.25%, and there's an 8% chance that we stay there and a 92% chance that we get a 25 bips rate cut. Remember, the president is currently arguing for a 300 bips rate cut, so about 12 times more. But anyway, that's where we're currently at least according to this tool. If you look at Polymarket, as of right now, there's an 83% chance of a 25 bips rate cut. And if you look at Kohrs, there's currently an 81% chance. So Kohrs has the lowest odds of a 25 bips rate cut, coming in at 81. And then if you look at the Fed Watch tool, that's closer to 92. So there's about a 10% difference there. But overall, it seems like the smart money is on a 25 bips rate cut, obviously coming into that September 17th meeting. But between now and then, the one pivotal event that's going to have a huge impact on these numbers is that unemployment report this Friday. Remember, it all comes back down to the Fed's dual mandate. The Fed has two specific goals: keeping inflation at the longer run goal of 2%, and obviously a strong labor market. So if inflation is high, they're going to try to fight that. If the labor market is weak, they're going to try to support that. That's their dual mandate. And I think that's really important to remind people, because right now there's a lot of rhetoric of how much is the government paying in interest on their debt, this, that, the other thing. Remember, that is not part of their dual mandate. If you are a member of the Fed, you should consider only two things: what is going on with price stability, aka inflation, and what is going on with the job market. Obviously, you don't want that soft or weak of a job market. So those are all the major things for this particular September. But to have a little looky-see at past Septembers, we have to get into seasonality. So over the past 20 years, this is the seasonality of September. We start off the month weak. We have a big pop about 2/3 of the way through the month, and then it sells off into the conclusion of the month and really the start of October. Once again, this is the last 20 years worth of data, and maybe to you, that's important to have that much data, or maybe you want to know more so of how it's played out recently, and it is not good. Over the past 5 years, September is by far the most bearish month of the entire year as it relates to the S&P 500. Same thing over the past 3 years. It is the most bearish month. And then also, if you look at the weekly, you can see 1, 2, 3, all 4 weeks of September on the 5-year and on the 3-year period, all are bearish. So once again, that is for the SPY. If you want to look at the Nasdaq, surprise, surprise, September over the past 5 years, it is the most bearish month. In fact, over the past 25 years, September is the only month as it relates to the Nasdaq, the tech sector, Qs, that has a negative return. The average return over September for the Nasdaq is actually a loss. Same thing over the past 3 years. You could see it is the most bearish month. And then if we look at the weekly, all these are bearish. 5 years, all these are bearish. So what you need to know going into this is that seasonality is very clearly, evidently bearish. since 1985. Oh, sorry, I misspoke. I said it was the past 25 years. It's even more. September is the only month with a negative average return on the NASDAQ 100, 53% win rate, but an average drop of 0.8%. It is the only one in the NASDAQ. I mean, that's 41 years worth of data. So is seasonality the end all be all? No, but it's a good idea to know the tailwinds and the headwinds that are either going with your trade or going against your trade. And then obviously, not last but not least, we should talk a little bit about the Russell. Same thing. It's a losing month. Technically, March is worse over the past 5 years. But if you look at the last 3 years, it actually is the worst one. And then we could hop into the weekly. You get the same general vibe. Basically, those September monthlies for the small cap sector, not good. In the past 5 years, we just have 4 weeks of bearishness right now from a seasonality standpoint. Obviously, if things happen this time around, I'm not in any way trying to pitch you that every single September is bearish, every week of September is bearish, but I'm saying that's the way the numbers do average out. So once again, the more you know. And then right here on the Russell, wake the IWM bulls up when September ends. The index has a horrible track record in September with an average return of a loss of 1.76% over the past 25 years. So the SPY, the Qs, the Russell, no matter how you look at it, the data for this particular month, I know a lot of people tell you that October is the worst month. It actually isn't. The worst month on an average basis is September. So good for everyone to know. And just, I thought this was kind of interesting, kind of taking a step back here. SPX, the S&P 500, 4-year election cycle, seasonal composite. So basically election year, post-election year, mid-election year, pre-election year. We have the election year, the year right after the election, where we are right now. This is how it averages out, the black line, and this is our current path, the red line. It does have a little bit of a tilt, kind of really, we tilt down and then stay flat, and it doesn't pick up until basically a year from now when we're at the end of September of next year, and then it kind of rips into the whole pre-election year thing. So I just wanted to take that step back, and there's different ways to average out this data and see the certain cycles you're in, but just if we are to follow this, a little bit down, a little bit up, a little bit down, and then a lot up, but we might end up having about a full choppy year from here if this were to play out. Very quickly, with respect to individual equities, because I'm running out of time, we only have 5 minutes left. We're out of earnings season. Neo reported this morning. You might care about Dollar Tree, Macy's, you might care about Salesforce, C3 AI, GitLab, but overall, pretty much all the major ones have reported. The only one this week that I'm really interested in is Broadcom. That's the world's second largest semiconductor play. It goes NVIDIA, then Broadcom. Broadcom, obviously, AVGO is the ticker. You might want to pay attention to that after the market closes on Thursday. We also got some news related to Tesla, which has been getting kind of beat up lately. Tesla falls short in India with about 600 orders since launch, very low count. And this is what we're seeing in India. But remember, they're losing ground in Europe and also in China. So India, China, Europe as a whole, Tesla is not hitting the numbers that people are expecting them to hit. So maybe, ideally, fingers crossed, this is just like a short-term misstep. And hopefully this isn't the general trend forward. But overall, Tesla's still doing great in the US in terms of sales and popularity, but on a global scale, definitely missing a little bit of the mark. If you haven't already, don't forget to sign up for the newsletter. Goodbye, August. Hello, September. It is 100% free. It's always been free, always will be free. Comes to your email inbox every single Sunday. I break down what's going on in the market, cheat sheet for all of the earnings, and then I kind of highlight the ones I think you're really going to care about. A little cheat for all the major macroeconomic events of the day, and then seasonality for each individual day. So, for example, over the past 27 years, this day, September 2nd, this is the hypothetical equity curve you would have if you bought it open, sold at close on the S&P 500 futures market. For a lot of years, it kind of did nothing. Recently, sold off. Wednesday, tomorrow, a little bit more bullish. Thursday, bearish, neutral, bearish. And then Friday, same thing, neutral, bearish. So those are the individual days. So obviously, we've done the individual days, we've done the weeks, we've done the months, and then we've even done it with the election cycle. And putting it together, overall, this period is just not that bullish. I guess people get a little bit of that seasonal depression, if you will. All right, bringing it back to us today. So right now you can see the momentum early this morning is pretty bearish. 5-minute, 10-minute, 30-minute, 4-hour, all bearish on both the ES and the NQ, the S&P 500, and on the NASDAQ. Looking at the daily, like I said, seemingly we put in a local high. So the real test here is what's going to be the next low. Right here, we've been in this cycle of high, low, high, low, high, low. And every single time we put in a low, it is a higher low. By definition, if you have higher highs and higher lows, by definition, that is a bullish trend. So right now, you could even say, based on where we are at this exact moment, that it is still a bullish trend because we have not broken this low. I cannot tell you how important this level is, but 6,343, watch it, because that is the recent low. And if we snap it, that might be suggesting a new trend, because at that point, we at least know that we have a lower low. So from there, we're going to be watching the next high. And if you look at the NASDAQ, it's actually even weaker because we put in a lower high here. At least on SPX, we have a higher high. But when you switch over to NDX, we clearly have a lower high. And obviously the question is going to be here. Let me switch up the color just so it pops out a little bit more right here. On NDX, the actual NASDAQ, the low is 22,959. So watch it. These are both the lows from Wednesday, August the 20th. Actually, am I right on that? Yeah, Wednesday the 20th. And actually, we're about to get rocking here. That's NQ2. Things are getting testy. Where's Bitcoin at? Lower highs, lower lows. It was looking good. Fake out, breakout. Broke these lows, put in a lower high, started to puke. Dude, this could get messy. So obviously throughout the day, we're going to be watching the options flow, not only for the Mag 7, but for the overall market. We're going to be watching a lot of these key levels, but this might be the shift. We might have a little bit of a pullback here. In terms of the degree of it, well, I'll tell you better when it's over. But what I can tell you is going into this, there was a lot of bearishness. So we're going to cover this after the market opens, but this is free from Spot Gamma all the way up to September 5th. They do a very extensive breakdown of the actual switches in the options market, not that engagement bait bullshit that you see on Twitter where people just see large positions and think it's something meaningful. Here, they actually break down what's meaningful. You should also know going into market open today, this is the last day to get the Apex deal of 90% off. It ends tonight. 90% off. They don't run deals this good, this often. It's equivalent to their best deal ever. It ends today. Shout out to Apex. They are the stream sponsor. And just to celebrate that, I am also giving away some of these accounts. So if you go to my Twitter, it's also in the description of the video, right? Where's my profile? It should be the pinned one, but we're giving away 5 of these accounts. We did it last week, running it back this week. It's free for everyone to enter. All you have to do is like, retweet, and follow. And I'm going to give away 5 of these today. So make sure you're checking out your inbox if you happen to be a winner. And if you miss out on that, don't feel bad, because you can get these accounts for dirt cheap right now. All right, let's get ready. Let's get ready. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. All right, dude. What's getting rocked this morning? Palantir's getting rocked this morning, down 3%. Avago's getting rocked. Nvidia's getting rocked. Dude, that is some bearishness. I've been on a rough patch with my swing plays lately, but I have a feeling that we're looking pretty good today. We are looking pretty good today. Hell yeah. That is some nice gains to open up. I have some Q puts, I have some SPY puts, and I have some BITX puts, long puts. So betting on the market dropping, and really what I'm looking for on the SPY, I was kind of doing this as you guys were awkwardly being a little bit voyeuristic this morning and watching me prepare. But right here, you're hearing all those breakdown alerts. Actually, no, that mic is not on. But looking at some of the key levels where like, okay, I kind of wanted to know like the oh shit levels, like if we snap that, how problematic is it? And I could tell you the oh shit level today on the SPY is 635, because if that is not held, the next backstop is $5 south of that at 630. So if you're watching SPY instead of SPX, very much watch this long put level at 635. And then if you are looking at the Qs, the equivalent that you might want to be paying attention to today, just from what the gamma structure is. Where are we at? We are currently at 560. So, we're at it. 565 down to 560. After that, you might be watching 555. You might be talking about 550. Yeah, we are really out of the gate. We're already pushing the oh shit levels. Very important to pay attention to. Like this could get saucy just because the delta impact of if you have these long puts go in the money, that means that if they're at the money, they're going to be hedged to the delta ratio of probably 50-50. As they go more and more in the money, the market makers are going to have to hedge those out accordingly. And since they're long put positions, they're going to have to hedge those out by going short. That's how market makers hedge long put positions, is they buy the equivalent based on the delta. That's how much percentage they're going to buy. So as it goes more and more in the money, they're going to have to go more and more short. So before you know it, it very quickly becomes a self-fulfilling prophecy for the market makers to hedge out their books from all the people buying those puts. So once again, the SPY snapping 635 is a very big deal. 635 sets up a test of 630. The Qs snapping 560 sets up a test of 555. So I do not know if they will break or not. All I'm telling you is those are important levels. When you come to an important level of support or even resistance, you have that 50-50 chance. Pay attention. Either it's breaking down or it's not. But I'm telling you to look for the reaction there. Once again, write this down. SPY 635 and on the Qs 560. So the Qs are actually very close to that oh fuck level. The SPY has a little bit more room to go. But you should also know, why do I have this all up? Okay, I don't quite need that right now. These are my key levels of the day. Look at that giant gap down. Holy crap. SPX, when we closed out, we were at 6,460, and this thing puked almost already 100 points. You can tell just from a structural level, like I said, another thing that you might want to map out is 6,344, because if we snap that, that's officially a lower low, which we have not seen in a while. We have not seen a lower low since April. Literally from how crazy is that? From a structural level, the last time we saw a lower low, April, which was obviously taking out the mid-March lows. But ever since then, higher low, 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 higher low. Like this is a legitimate shift, folks. Well, it might be if we actually snap that. So paying attention, obviously, closely paying attention. Other than that, I know this is busy. 6,400, I was going to pitch to you guys as the level that the bulls really needed to hold today, but we actually opened up below it, so that's not so good. So from there, I'm watching 6,350. There's quite a bit of open interest positioning at that level. We obviously have the structural breakdown at 6,344. Below that, there's some open interest at 6,325, but the most is at 6,300. So what I care about is basically target 1 for the bears, and then target 2 would be all the way down here. Now, if it's able to catch itself here, or if it catches itself at any of the support, obviously a retest of 6,400 followed by 6,400, either between 20 and 25. Early this morning, there was positioning at both of those levels. So that would be my bullish target number 2. Number 1, number 2, bearish target number 1, bearish target number 2. For me, obviously, I have the bull case and the bear case. I'm particularly only interested in the bear case today, and part of that is because of the positioning of the large players. Ideally, not only do I want to trade with trend because I find that it makes my life far easier, but I've also found very much not only price trend, but be in the same positioning as big money, because big money is what's going to move the market. And shout out to Spot Gamma, by the way. You can get this breakdown for 100% free. It is free all the way up till September 5th. It's in the description of the video. You can see that some of the positioning that played out on Friday, and then when they crunched all the numbers and gave it to us this morning, is crazy. Extreme NVIDIA volatility. NVIDIA shows a 100 percentile Vega at 1.9 million, signaling high volatility, bets post-earnings slump. And obviously, if you look at what NVIDIA is doing this morning, they made some money. Tesla bearish delta. Tesla extreme 0th percentile delta, a drop of 577 million, indicates strong downside positioning. Basically, a lot of kill selling and a lot of put buying. SMCI, it's the final two that I find to be the most interesting. VIX 100th percentile delta reflects hedging amid market retreat, as in a lot of people are buying downside protection with the VIX spiking. That if the market drops, the VIX will spike. That's the protection. And then index bearish bets, strong bearish index ETF flow with dominant put buying, which we have not had since April, really. It's been a moment since we've seen these types of numbers. So very interesting. It's a very extensive PDF breakdown that comes to your email inbox every single day. Check it out. You can get it free up till the 5th. It is in the description of the video, and my mod will also drop it into chat. All right. So we're seeing a little bit of a reversionary bounce. That was to be expected. I'm actually surprised we didn't see it out of the gate. I thought what we're seeing right now, we would have seen at minute 1, just because of how popular it is to play the upside gap fill. What I care about is kind of when we get, I don't know, all the when everyone knocks off the rust of the holiday weekend and the emotions really play out, I want to see how this starts to settle. So for right now, I'm personally not really doing anything. I'm just kind of chilling, waiting. I'm watching my key levels. I know 6,400 is going to be important. I know 6,350 is going to be important. So for me, I kind of want to see which one breaks first today. I have no magic crystal ball or clairvoyant abilities to tell you which is going to break first. All I can tell you is that they're the key levels, and then obviously react to them accordingly. Let me reload this. And also I could tell you on a personal basis, I'm either looking for a bearish setup today, and if it doesn't present itself, then I just like won't be trading. That's like my personal opinion based on price structure, price momentum, and also options flow. I believe price structure, price momentum, and option flow, as of right now, just from a pure math, like data standpoint, does favor the bears in a shorter term time window. I'm not talking about long-term investing. I'm talking about the short term, as in today, the next couple hours, obviously the opening session. And if I don't see that setup, it's all right. I'm just not going to take the trade. I'm just not going to take the trade. So it is A-okay. So I'm going to be watching the flow. If you don't know what this is, this is another aspect of the Spot Gamma platform. The white line is the price of whatever you're looking at. I happen to be on the tab for the S&P 500. And then the two colored lines are the delta flow. So the teal line is the zero DTE delta flow. So whether people are buying or selling calls or puts for the zero DTE expiration, as in today's, and then the purple one is all expirations put together. So it's the zero DTE plus tomorrow's plus the next day's plus the next day's. So it's all of it put together. So those are the three lines. On the Mag 7, you're seeing the same thing. This is the combined delta flow, but with respect to Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. And obviously it's these Mag 7 that make up most of the influence when it comes to the entire S&P 500, when it comes to the entire NASDAQ. So sometimes it's useful just to see what these guys are doing because, like I said, they are without a doubt the most influential. Let me switch up my screen so you can see. I haven't made any trades yet today. I was looking at the hourly chart, seeing what's going on. Looks like we found some support. Once again, not surprised that people are attempting to buy this first level of support. It's a smart trade. It is a low risk, high reward opportunity. Anyone with functioning eyes can see back in late August, we bounced, or really mid to late August, we bounced. There's two levels of support. Guess where buyers stepped in? It's that exact one. It's a smart play because if you're right, great. You get to ride it all the way back up. And if you're wrong, it's a paper cut because if you keep going, you just cut your position. So this is exactly why I said, like, I was a little surprised right out of the gate we weren't popping. So I get this. I'm not joining that party just because all of a sudden, if the weight starts to hit them, all of a sudden, if people who are long decide to lock in their profits and they're like, you know what, I made enough money from April to now, it's time to lock in. If they use this as an opportunity, if the bull camp uses this as an opportunity to lock in profits, all of a sudden you could very easily have some extreme selling pressure. And then we snap that level. And then before you know it, let me zoom out. Even here, look at that. Support. Yeah, very important level. No one should at all be surprised that we're bouncing from here. Let me load a little extra data just so we can see what's up. Okay, from there, if today's support does not hold on NQ, if you happen to be day trading, swing trading, whatever related to NQ, yes, we officially have lower highs, but we also have higher lows. So when you have lower highs and higher lows, by definition, that is consolidation. If this does not hold today, this shelf that we've been paying attention to, well, obviously the next technical target would be all the way down here, just below 22,800. So am I guaranteeing that? Absolutely not. I'm just letting you know. And then obviously if we bounce out of here, I would be looking for a bounce back to the scene of the crime, closer to 23,450, maybe 500, something like that. So if we do bounce, looking for a bounce back to the scene of the crime. If we do break, I guess I'm looking for a break and a sell off to the recent technical low, a different scene of a different crime. So that's what I'm kind of looking out of the gate here. But I have no plans or aspirations to be trading this early today because I very, very much want to see how things are just like structuring themselves. Yes, we do have some upside gap fills. They're considerably far away, so they're not really of the highest interest for me to play. The SPY does have an upside gap fill all the way up to 643. We're currently trading at 637. Could that get filled today? Of course it could. but based on that distance, it's in a low likelihood quintile when you start to split up the odds of like how big that gap is. Same thing on the NASDAQ. There's an upside gap fill all the way up to 568.54. So there's a good chance today you're going to hear a lot of people talking about gap fill plays. They're very popular plays. When it's this far of a distance away, they're not that statistically likely, but still popular plays nonetheless. Obviously, I'm not playing it. I guess I should point out the fact that the Qs did just bounce off of their 50 EMA. So buyers coming in at technical support, also EMA support, and also just reversionary support. So I get it for sure. Hang on. Edit crossing up. All right, let's do that. And then also edit crossing up. Okay, we have that as well. Let's move that down there. Cool. All right, so we have some important alerts set up. To make it very, very clear, I told you, I want to make it this evidently obvious. I'm either looking for a bear setup today, and if the setup does not come, I'm just going to have no trades today. So that's it. I am not attempting to be the hero and catch this falling knife. It feels like, especially underneath, like there's some fuckery afoot. You could even see here, the big guys on Friday started to sell. This was Friday's trading session. Early this morning, they're already starting to sell again today. I do not have these visions of grandeur of chasing it to the upside. I do not. And I should also let you know, just if you happen to be day trading or scalp trading today, at 10 a.m., we have ISM manufacturing PMI and prices. And then at 2 p.m. today, 2 p.m. Eastern, all these times are in East Coast, like New York Standard Time. PMI prices at 10 a.m., 2 p.m. Eastern, U.S. President Trump will be speaking. We are told that it is related to the Defense Department. We are told it relates to the Defense Department. So we're going to see how that plays out. You still on puts? Of course I am. That's the smart play right now. We gap down over 1%. Of course I'm still on puts. That would be insane for me to be loading up on calls right now. I mean, if you are loading up on calls, I guess I wish you the best of luck, but I also have no clue what you're looking at in the market. As of right now on the watch list, looks like NVIDIA is down the most. It's making a decent intraday recovery, but nonetheless still down the most, followed by Avago, followed by Palantir. What do we have going on? Apple's getting hit. Meta's getting hit. Microsoft, it's all red. It's all red. All red, all red, all red. All red. How my accounts are doing? I haven't traded them today. I personally bought 40 accounts because I want, just why would I not get on the deal? I don't know if I'm going to trade them all yet though. But right now, when Apex is running a 90% off deal, it's too hard to pass up on. Like, these accounts are dirt cheap. I think they were 17, 18 bucks, something like that for those tests. So like, if you are in the world of Simda Funded, if you're interested in it, if you want more accounts, it doesn't get better than 90% off. The deal does end today. And on top of that, I'm giving away 5 extra. So 5 of you who like, retweet, and follow my Twitter account here, it's in the description of the video. I'm giving away 5 of those accounts. And whether you're a lucky winner, if you just want to go buy one for yourself, or remember, you could have up to 20 PA accounts. And in terms of evals, you can have literally as many as you want. But I always load up when it's this cheap, just because, like, financially, that is like the smart thing to do. But anyway, ends tonight, 90% off. Don't forget to use that code Goonie. And then the Flow Patrol, this breakdown that we were doing from Spot Gamma, where it can tell you buy to open, buy to close, sell to open, sell to close, and gives you the actual positioning. For example, we saw between really the action on Friday, someone buy to close, buy to open, sell to close. The interesting positioning I thought was here, end of the year, right here, January 16th, 2026. Someone loaded up some positioning here. You could see buy to open, sell to close, the exact same amount. So just to kind of like see the open interest different and pay attention to what's going on. The one that they're really calling out here, this VIX one, is, let me highlight this, VIX 31 strike calls for October 22nd, 142,000 buy to open. This is a fresh new position, betting on the VIX spiking, pretty much doubling where we are at, which is absolutely nuts. Absolutely nuts. 142,000. They are very, very much expecting vol to spike. So there's a lot more going on here. Like I said, it's a freebie. You can check it out, see if you like it. It's in the description of the video. My mod will put it in chat. But I'm awkwardly just trying to wait here and wait for this opening session to play out. I'm really, really trying to stop myself from trading early right now. We sold off for the first 2 minutes. The Qs are recovering a bit better. The SPY kind of bounced up. If anything, it's now just going sideways. NVIDIA is showing a bit of life. It was down the most. It's actually still down the most, but a lot of things opening weak, and we're seeing a bit of recovery off of all those key levels. I do want to remind you where we bounced this morning. Not only do we have the upside gap fill, the Qs, QQQ, the ETF for the NASDAQ, perfectly bounced at the 50 EMA. If you're looking at the NASDAQ futures, we perfectly bounce off of these previous lows that we saw mid to late August and then also in early August. So we're bouncing off like kind of expected key levels. The golden question right now is it going to hold? And obviously, unless you can tell the future, no one can guarantee that. So if you took this bounce play, great. Set your stop to break even, especially if you're already, whatever, profitable, nice like that. You have a freebie ride. And if it does bounce, awesome. You get to ride it up. But then it also protects yourself just in case this thing dumps at some point today. Well, it didn't cost you anything. So if you were attempting to buy off the support, I completely understand the trade. I personally didn't take it, but if you did it, like, hey, it's a low risk, high reward opportunity. I'm not going to shame you or admonish you for that. Hey, the market's 50-50. We might go up, we might go down. You got in at an optimal risk to reward setup, and I would never, ever blame anyone for that. So if you took advantage of it, obviously, massive congrats to you. And right now, it's all about risk management. Your goal at minimum should probably be putting your stop to break even. And then just if you have a lottery ticket, it's a free lottery ticket. You get to ride the ride. And if it goes, awesome. If it doesn't, didn't cost you anything anyway. GRYP merger with American Bitcoin tomorrow. No fucking clue what you're talking about. With American Bitcoin tomorrow, I have truly no clue. And that sounds like some I don't know, meme coin bullshit, honestly. GRYP with American Bitcoin. Literally no knowledge of what you're talking about. Calls are up. Well, they're not from Friday. If you bought them today, they are. But if you swung them from Friday, they're obviously clearly not because the market's down 1.2%. So when you say calls are up, you're talking about from market open till now. But even that, from market open, they're up on the Qs. They're not up on the SPY. If you bought calls at market open on the SPY, you're still down. The only one that's up, well, I guess NVIDIA would technically be up. The Qs would be up. But generically, calls are up. That's not true. They're up on some, they're going to be down on others, and they're going to be down on most because of the, obviously, the large gap down that we got between Friday and now. But yeah, see, even look at this. The vol and the SPY is starting to get crazy. We almost broke down there. Big reversal. The Qs, a smaller, like same structural thing, smaller, but same thing right there. 947 dump and then a pop. I'm attempting to not do anything until we get those 10 a.m. announcements. We're going to get the ISM, PMI, and prices at 10 a.m. We're going to be getting these numbers. Maybe our boy Rick Santilli will be talking. 9 minutes. ISM manufacturing PMI and prices, line in the sand, respectively, is 49 and 65.1. So I really hope that they do bring on our boy Rick Santilli so we can see what he's up to. So we can know what that guy is up to. Maybe he can give us some comforting words. So out of the gate, I can tell you for the first 5 minutes, the Mag 7 flow didn't really do anything. And then ever since about 10-ish minutes into the day, the Mag 7 Delta really started to pop. With respect to the S&P 500, it's also generically trending up, but not as much as the Mag 7. The Mag 7 Delta flow very evidently bullish right now. The S&P 500 telling it's bullish, but not as bullish. I wouldn't call this bearish. Obviously, we are trending up, but the 0 DTE is pretty much flat. It is the longer duration that is puts are getting closed out. So people aren't buying calls here on the S&P 500. Puts are being sold. Sell to open, sell to close, that's a different story. But people are selling puts. The movement we're seeing in the SPY is not related to calls. It's related to puts. While on the Mag 7, it is actually both. Calls are being purchased and puts are being sold. Once again, just because you're buying or selling, you don't necessarily know if it's buying to open or buying to close, or selling to open or selling to close. Remember, when it comes to options trading, you can create a new position by buying a call, but you could also create an entirely new position by selling a call. So that's like the acronyms that we're seeing up here. buy to open, buy to close, sell to open, sell to close. And we're getting a big pop going into this announcement. A big pop going into this announcement. Dude, are they going for this gap fill? They going for the gap fill today? Anyway, when you go on various forms of social media, you're going to see all those people, as Spock Emmon refers to them as the flow bros, where they just point out individual large options orders and they're like, look at this. And it's like, it's engagement bait. It's always a form of like Monday morning quarterbacking, like this, that, the other thing. But anyway, remember that a lot of those times when they call it out, they have no idea what they're talking about. They don't know if it's selling to open, selling to close, buying to open, buying to close. They don't know if it's a part of a vertical. They don't know if it's a part of a roll. They don't know if it is a market maker just unloading on a different market maker, and then there's really no net impact. So a lot of these times when you are scrolling specifically on Twitter or X, when you see those posts that they're like, look at this large trade, oh my God, someone knows, they always know. I kind of believe that someone always knows, but in terms of is that trade being represented in the market, you don't know. Obviously, well, here, I have a great example of it. Where are my replies? I was fighting with someone over the weekend. Where is it? Right here. All right, so on TrendSpider, filtering for sweeps, 100K ahead of the PCE tomorrow on the Qs. The flow is unanimously bearish. So right here, you can see all that, like 273, 335, 226,000, 842. So that's like millions of dollars of trades. Okay, that's fair. Except when you think about that proportionately, billions of dollars are going to be traded in notional value in the NASDAQ. So like, are these really that special? And they're saying it's unanimously bearish, but like that would almost be saying like all day a roulette wheel is spinning. And if you just pick out 3 or 5 times that it lands on black, you're like, oh my God, this roulette wheel is landing on black all the time. You're like, dude, you just picked out 3 to 5 data points when this thing is running all day. That's the exact example. They're picking out quote unquote large premium because to me, to you, $842,000 sounds like a lot. It is a lot, but proportionately relative to how much options is being traded per day, it's trading billions and billions and billions of dollars. So proportionately, it is very, very small. And then I just asked, please explain how you know that these are bearish, because you don't know. Are these being bought to open? Are they being bought to close? Open, close. That's a very, it's literally the opposite distinction. No less, is it a part of a roll? Is it a part of a spread? Is it a part of a calendar spread, debit spread, credit spread? There's so many questions that have to be broken down there. And then the first response I get is just because it's bearish inherently because they called it bearish. Like that's the logic that you were dealing with other retail traders. Because the filter on TrendSpider has bearish in it. Oh, okay. So because a service calls it bearish, it then must be because it is. It's kind of like because I say so. Because we call it bearish, it thus is then bearish. Gotcha. Okay. Sick. I think I understand how it works now. I think I've finally figured it out. That's how it works. Oh, geez. For the newbies, what does 2R, 3R, 4R mean? Generally, risk to reward. Like if you're risking 1 unit, then your risk to reward, if it's 2R, you're going for a reward of double that. If you're risking 1 unit, you're going for 2. 3R, obviously, 3 times the return rather than the risk. So it's a unit-based measurement. So for you, a unit risk might be $100. For someone else, it might be $500. So it's a way to kind of normalize it of instead of saying, oh, I'm risking X amount of dollars because for some people, they're trading larger accounts. Other people are trading smaller accounts. It's a way to normalize it. So it's basically saying per unit of risk, what is the reward that you're going for relative to your own risk? So it's a way for people trading different account sizes and whatnot to still have, a similar conversation. It's just a way to normalize it on a risk adjusted basis rather than just a dollar amount basis. Because someone might be risking $100,000 and maybe that's 0.1% of their account, but to us it sounds like a lot when in reality it's a small bet for them, and then vice versa. Maybe someone is risking 10 grand, but if their account's only 10 grand, they're risking their entire account. So it's just a way to normalize those conversations. Glad Matt figured it out. I have no idea what is happening today. Figured what out? What did I possibly figure out? I don't think I figured it out. Is completing a reverse stock merger with American Bitcoin following shareholder approval. Okay, don't care about it. A reverse stock merger for an unknown company? That sounds incredibly boring to me personally. I mean, like right now we have so much opportunity with well-known, well-respected, legit blue chip stocks. And the fact that people are still getting tricked into chasing like these low float penny stock bullshit things. Can you make money playing penny stocks? Yes, you can. Most of the time, the people who are good at it are making money from shorting penny stocks because they're dog shit, because they're penny stocks, and they're penny stocks for a reason. And this is coming from a person who's lost a lot of money in that world. That's where I started my trading career. Because like when you start, generally you don't have much money. So you're like, okay, I don't have much money, and a 10% return, a 20% return doesn't sound that exciting. So you end up going to things where you think you could get a bigger return. But in reality, the edge in trading penny stocks is to the downside. They are penny stocks for a reason because they are horrible companies. And I get the allure. I was there. I totally understand it. But also as a person who's been through there, unless you're a person who knows how to take advantage of hard to borrow short situations, you're going to end up worse off than when you started. Like there's there's outliers, of course, but when we're just talking about like it generically, penny stock trading is not a way to consistently be profitable. In fact, most people are going to lose money. And so I understand the attraction to it. It's just this idea that you can turn a little bit of money into a lot of bit of money. So like I understand why people are attracted to it. But since I've been through it and also seeing all of that and then seeing the opportunity with like legit blue chip actual stocks, like I just don't get how people are attracted to that right now when you have great movement in the overall market, when you have great movement in high flying stocks like Nvidia, MicroStrategy, Broadcom, Tesla, Coinbase, Salesforce. Like when you have legit companies that are doing a legit thing and you can get good information on them and do good research and find good statistics, I don't get why anyone at all is attracted to the world of penny stocks when you figure that out. Like, yeah, I just don't get it anymore. I don't get it. All right, we are about to get data in about 45 seconds. We fast forward here. All right, hopefully they bring our boy Rick on. This is the event that I've been waiting for, this 10 a.m. announcement. And after that, ideally, I can finally start to trade. 5 minute is pushing bullish, 10 minutes bearish, 30 minutes bearish, 4 hours bearish. 5 minute is pushing bullish, 10 minute was testing, 30 minute is bearish, 4 hours bearish. It's really, when I see this type of a setup, it's really hard for me to go bullish right now when you just see all of it getting blown out. I get that in the short term, when people are looking from 9:30 to now, it looks good, it looks enticing. But remember, this is 30 minutes worth of data. Don't forget to check in on your other time frames as well, like what's been going on. Like it's actually Tuesday brutal. Welcome back to Squawk on the All right, Street. Obviously it must have been good. The initial reaction's pretty good. Right here, manufacturing coming in lower than expected. ISM manufacturing PMI 48.7. They expected 49. Manufacturing prices 63.7. They expected 65. We are in that upside down world of bad news being good and good news being bad. That's not Becky. No, Becky's earlier.
Less than 2% though away from record highs.
Come on, bring on Rick. Give us Rick.
A little bit harder. Some exceptions today, like a PepsiCo.
Give us Rick.
Getting an activist stake from Elliott. As far as treasuries kicking off the week, take a look. We have some selling with yields a little bit higher across the board. The 2-year at 3.645, the 10-year yield 4.269%.
Patience, folks.
Former Fed Governor Alan Blinder will join us ahead of this week's key jobs report. What's at stake for the Fed's interest rate decision, and his first comment on the future of Lisa Cook. The market still awaits.
Trying to go up a little bit here.
The future of President Trump's tariffs after an appeals court rules against him. We are live at the White House.
Come on, give us Rick.
Plus, as mentioned, Pepsi shares bucking the sell-off, rallying on news of a new activist stake from Elliott. What could happen next for the company?
500 tick.
Let's get some ISMs and construction spending with Rick Santelli. Hi again, Rick.
There's our boy Rick.
Hi, yes, these are the ISM manufacturing. We hit S&P about 15 minutes ago. This is an August read. There was no mid-month read. 4. The headline number, 48.7, which means we have 6 consecutive readings now below 50, which is contraction territory.
Oh, we're
But
above
48.7 is
6,400.
actually
Let's
the
see if
best
this can
number
hold.
since
This is
June,
going to
when
be
it
the
was
important level right
49,
here.
Still below 50. If we look at prices paid, there's some good news here. 63.7. 63.7 would be the smallest prices paid number since Feb of this year. That's a good thing. Prices paid going down take some of the inflationary pressures off of many products. If we look at new orders, 51.4. This is the only number above 50. 51.4 takes us back to where we were in January. That's the comp 55.1. And by the way, that was the last time it was over 50. So we've reached once again on new orders back above that expansion mode. On the employment front, on this very important week, we're going to get 2 employment reports. Comes in at 43.8.
All the way back up at VWAP here.
43.8 would be comping to the weakest level since 43.4 just last month. So we see that we are not doing very well. This is 7 consecutive employment component that is in contraction territory, meaning under 50. Construction spending always 2 months in arrears. This July number comes in at minus 110, pretty much exactly as expected. And how does that comp? That actually be the best number since April, when it was positive at positive 0.1%. Interest rates from 2s to 30s are all higher, but well off their highest levels of the session, as global longer-term rates continue to be sticky to the upside. Sarah, back to you.
Sarah,
Thank you, Rick
back
Santelli,
to you.
especially highlighting that lower prices paid. Important as we wonder whether to worry about inflation. There's going to be a lot. It's a holiday shortened trading week, but there's going to be a lot of economic reports to watch. As Rick mentioned, we'll get JOLTS tomorrow, always important job openings data, the Beige Book, which we know the Fed pays attention to, anecdotes from around the country on the economy. ADP is private sector jobs Thursday, and then Friday is the big August jobs report. We know since the Fed chair gave that speech in Jackson Hole, they're leaning at least toward September rate cut. Will the jobs number really strong change that narrative
The
or
Delta
that viewpoint?
popped right
I think that's
after
gonna be a
that
key
at 10.
question. We're
I'm
also
wondering if we're seeing the
getting
10 a.m.
more
reversal,
color
though.
around the consumer. We heard, for instance, from the McDonald's CEO this morning on Squawk Box. Listen to what he said.
If you're upper income, earning over $100,000, things are good. Stock markets are near all-time highs. You're feeling, quite confident about things. You're seeing international travel. All those barometers of upper income consumers are doing quite well. What we see with middle and lower income consumers is actually a different story. It's that consumers under a lot of pressure. In our industry, traffic for lower income consumers is down double digits. And it's because people are either choosing to skip a meal. So we're seeing breakfast. People are actually skipping breakfast, or they're choosing to just eat at home.
There's that bifurcated consumer again. Pressure on the low income, high income's doing okay, tied to the stock market and income growth. That's definitely been a common refrain this earnings season. While overall consumers holding up relatively well, there's a split, of course, across the spectrum.
Yeah, a lot of work over the weekend about real consumption, and we got some GDP revisions last week. It's running about less than half of the 2024 pace. That's consumption adjusted for inflation, but obviously we're watching. I think there's elements of even the Secretary of the Treasury has said if you don't have assets, it's a time of pressure to some degree. Right now.
And also they're looking a lot at the housing market, potentially what they can do there. We also heard from Signet on earnings this morning, and they saw growth in same-store sales. This is the big jewelry company. Good quarter from.
All right. I got bored by that. So right now, the SPY popped, the Delta Flow and price popped right after that announcement and then quickly started to get hit. Kind of seeing a similar situation in the Mag 7. So I spotted that, and it was a little bit of a risky trade for me. But then really what I took advantage of was this breakdown of VWAP. This white dash line is VWAP. So try to push back over, higher low, higher high. We started to fail. So I took advantage of that failure, and obviously I went short too. I'm trying to lock in one. If I'm fortunate enough to be able to lock in one, I will then from there just move my stop to break even, and if I catch a fish, I'll catch a fish. If I could ride the trend, I'll ride the trend. But basically I was trying to take advantage of this trend reversal. The issue is I just don't know how big the reversal is going to be. So by definition, or at least the way I look at the market, it did reverse. right here, we had a succession of higher highs and higher lows. And then starting right here, it did make a fresh low. This breakdown here at 10:03, put in a lower high. And then right after a lower low and a lower high is when I took the trade. It also happened to align with an EMA breakdown. It also happened to align with a failure at VWAP. So there were a couple of things I liked about it. But even with that being said, remember, your odds are still going to be roughly 50-50. Even when things line up, you can still have losing trades. So even though I'm confident in this, that's exactly why I still had to put my stop. I'm trying to scale out of one at what I perceive to be a key level, 23,200 right here. You could already see that there's quite a few buyers trying to step in at 23,200. That's why we have all of this. So they are trying to protect that, and which is why I'm trying to scale out of one. And ideally, I could scale out of one if I can. Awesome. If I can't, that would suck. But if I can, I'll move my stop to break even, and then I have a freebie play. I'll have the other contract, and if it goes, it goes. If not, it doesn't. So I was getting close there for a second. Looks like it bounced off of 07. So it was getting, it got even closer actually. It bounced at 5. So I'm trying to unload one. And when that unloads, I'll just move my stop to break even. Freebie play. And then remember, big money comes from big trends. It doesn't matter if you're scalp trading, day trading, swing trading, whatever it is, the time frame you care about. Big moves are a function of time. Obviously, we can move much more in a week than we can in a day, than we can in a half a session, than we can in an hour, than we can in a 5-minute bar. So for me, I kind of want to get in this like measured target move. I'm identifying a key level. I'm trying to play a new trend, and maybe I'm wrong. Maybe this ends up becoming a higher low and we pop and whatever. I protect myself, and it is what it is. Like that shit's going to happen roughly about break even now. So maybe it goes, maybe it doesn't. I don't know. All I can do is I'm in charge of my entry decisions and my exit decisions. I am not in charge of the price movement. I think there's a lot of people out there trying to pitch these hocus pocus-esque ideas of like, oh, I'm right all the time and I make all this money, blah, 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 blah. No, you can't. I mean, really what I'm most in control of is this risk line. As soon as you start to like really focus your personal trading, whether once again, scalp trading, day trading, swing trading, investing, once you are realizing that your major job as a trader and or investor is to be in control of your risk and do everything in your power to follow your strategy's risk, parameters, if you will, that's when your career is really going to start to take off. So will this individual trade work for me? I don't know. I thought I was patient. I waited for a lot of things to align that I liked, but still, even with that, I will fully admit that there's a double-digit statistical chance that it does not go my way, which is why when I first get into my trade, that's when I'm really at like my biggest danger, because I haven't been able to lock in one yet. And even right now, yeah, I'm up a decent chunk and I'm stoked about that. But I can breathe a sigh of relief, if you will, when I lock in this first one, because the other one goes to break even and it's a freebie play. When your stop's at break even, whatever. If it goes, it goes. If it doesn't, you're not going to be crying over spilled milk, because I'll already locked this one unit move in. I went short at 24, so I'm trying to lock in 24 points there. 24 points. That's going to be a good chunk right there. That's going to be just under $500. That's about 580-ish locked in, maybe after commissions. Come on. Give it to me. And then this one down here, all the way on the bottom of your screen, that's not really my target. I just put that in there just in case. All right, cool beans. Boom. That easy, folks. That easy. Locked in 500 per account. I have a runner. If it comes back up, I'll get no extra money off that trade. But guess what? I already locked in $500. And if it pukes from here, if I'm lucky and it doesn't like test my levels, okay, then I make even more money. That's my point, is like, I think a lot of people, when it comes to active trading, they try to overcomplicate it and they hit you with these super complex bullshit models, this, that, the other thing. No, lock it in. If you catch a runner, you catch a runner. If you didn't catch a runner, you didn't catch a runner. Actually, I'm going to move this all the way down to 100 just in case things get really crazy today. Not that that's like really my target. My target is to play this new, see how we had higher highs and higher lows, and then it switched it, lower highs, lower lows. And if it comes back and knocks me, it knocks me. But all I could tell you is I've already successfully locked in $500 per account. Easy peasy lemon squeezies. This trade's out of my hand. If it bounces, cool. It knocks me out. It's a bummer, but I also just know from my own odds that I get knocked out like it's about to happen 2 out of 3 times. My own odds from my own trading journal and everything. 2 out of 3 trades, my runner is knocked out for break even. So from a psychology standpoint, that is literally the anticipation for me, is 2 out of 3 times I'm going to get knocked out for break even, which then brings up the fair question. Well, hey man, if a majority of the time you're getting knocked out, you're giving that unit back. Why would you do that? All right, so 2 out of 3 times I'm getting no extra unit, plus 0, minus 0, like whatever, nothing happens. But that 1 in 3 units, it could be a 5, 6, 7 like unit return, obviously outpacing the other 2 units I would have gotten if I took them all out at the exact same time, if that makes sense. So it's you're in it for, even though it happens less often, when you catch that fish, you want to ride it as far as you possibly can. That's why you do it. That is why you do it. Mag 7 flow starting to turn a little bit. SPY right here. Dude, I feel like it's been weeks in a row that we've been watching these 10 a.m. reversals, and I don't know. We're already seeing the initial structure for that classic 10 a.m. reversal, the classic reversal. But let's see. Right here, we do officially have a lower low. We took out the lows we saw before, but what's going to be telling is the next high. So this next high, as we push, do we take out this intraday high on the SPY and the Qs, or is it going to roll over before that, really solidifying the intraday trend change? So that's really what I'm waiting for to see. And I should also kind of point out, I should do my job here and let you guys know that we got this bounce. Another reason why I was kind of aggressive with that stop movement is because I saw that the SPX was right at this massively important level of 6,400. This is a big psychological level. It's a big technical level. It's a big open interest level with respect to the options market. This is going to be the fight. See how we went up to it, struggled it, kind of got through it, found support. We got the reaction, the market's reaction to that announcement. Obviously, the market liked it. We quickly came right back down. The bears tried to push it back under here at 1010 to no avail. We got the bounce off of it, and it's going to come down to this. Do we take out the 10 a.m. high, or are we going to snap 6,400? That's going to be the major watch for right now, at least in my book, at least how I pay attention to this shit. Oh, speaking of that, do I want to keep my money on the day, or do I want to load back up?
Order submitted.
All right, a little bit more risk than I wanted. A little bit more risk for sure. I was 1 bar late to getting in. I should have gotten in on this bar. But hey, shit happens. Shit happens. And folks, same thing as before. I don't know if this is going to work. It could be a double bottom, and we could have like a W setup. It could double bottom and rip right through me. That's going to happen. That could happen, obviously. On the flip side, maybe we snap the support. To me, it still looks like lower highs, lower lows. So if we snap the support, I'm doing a measured move. I'm risking about 40 points, 37. So I'm going for about a 1-to-1. I don't know if it's a double bottom or not. I know a lot of people are trying to call out. They're like, oh, I'm so sure. You can't be sure about that, because inherently, if this is a double bottom or if it's a lower high breakdown, that's going to be decided by people who are about to trade. Are the people who are about to trade, are they aggressive buyers or aggressive sellers? If they're aggressive buyers, yes, this will be a double bottom. If they're aggressive sellers, nope, it's a lower, higher breakdown, and we're going to puke most likely back to where we opened. But the point is that you don't know, because that movement, that price action is going to be decided by people who are about to trade. They're going to trade in the future. They're going to trade after you. I threw on my trade, and then obviously the bar after, that's a group of traders, that's a group of traders, that's a group of traders, that's a group of traders. I have no idea what they're going to do. It's all up to them. So basically, my financial health is in their hands, and if they want to be nice to me, they can be nice to me.
Order submitted.
And then my robot system just traded as well. So that's all these 50K accounts. I'm working on a new system. This is purely robotic. That's why it popped off without me saying or doing anything. So I'm working on a new system that trades 1 time a day. It's kind of my newest variant of Icarus, but it's like kind of when Icarus becomes a sniper and attempts to take 1 perfect trade a day. So that's all of these on the 50K accounts. I could show you that over here, right here. It looks like it's targeting 82 is what it's going for. DS, yeah, that's the system trade. And here's the system right there, Delta. So that's kind of a look, mom, no hands type of a situation. I am not controlling that. That is all purely systematic. And I believe Wait, if that goes well, what's it trying to lock in? It's short at 98. It's locking in at 82. 15 points. So about $300 per account if that were to hit. I don't know if it will. I don't know if it won't. But that's so basically I'm systematically trading half my accounts and I'm manually trading the other half of accounts is currently what's going on. And really what I'm watching is this level. I know I'm showing you NQ a lot, which is the futures contract for the NASDAQ, but really what I'm paying attention to is the S&P 500. Will it hold 4,000 or will it fail here? This will either be a big psychological win or a big psychological loss, big technical win, big technical loss, big options win, big options loss. This is telling. And I think a lot of the times people try to predict of like, oh no, it's gonna like the bulls are gonna win. Oh no, the bears are gonna win. I deeply, deeply, deeply believe when it comes to the world of trading, not investing, trading, you should not be trying to predict this. You should just react to it. You should react to, hey, it's bouncing. Hey, it's breaking down. Don't be the person sitting there trying to be like, no, I think it bounces. No, I think it breaks down. I think that's a very, very weak way to approach this just because you're going to be right half the time. You're going to be wrong half the time. Speaking of right and wrong half the time, I think mine's almost about to get clocked. It almost got clocked there. Right here, before when I was like, it could be a double bottom. It could be this fake out. It could be, you just don't know, folks. You don't know. And I'm so sick and tired of people, especially in the retail world, trying to tell you that they have some specialty predictive powers. They have no specialty predictive powers. The best traders are the people who are reacting appropriately and being disciplined and only taking advantage of the low risk, high reward setup trades. And they do that time and time again and accept the variance. Like sometimes you're gonna have losses. Like that's just how this shit goes. Sometimes you have a double bottom. Sometimes you have a breakdown. You can have the exact same setups and I could find you counter examples to where it does exactly the opposite of what you want it to do. And then with the exact same setup, I could show you examples of where it does exactly what you want it to. So the fact that you could have the exact same inputs and then a different output, a different result kind of shows you the variance of this game. Maybe a metaphor that's equivalent to this is, I don't know, if you're playing blackjack, yeah, is there statistically the right thing to do based on your cards, based on like what the dealer's showing? Of course, but yet the result of it could be very different because there's going to be unknown pieces of information, and trading is no different. You can have the exact same setups right here. I'm going to protect myself. It looks like I'm going to give back what I had this morning, and that's what it is. I'm in charge of protecting my downside, and ideally, you just need that one nice trend move in your favor to keep going. That's it. That's it. That's it. That's it. Knowing my luck, it's going to wick me out and then dump anyway, because I've shown you guys that 400 gazillion times before, where if I had a little bit more, but hey, for the one in 10 times that happens, it's the other 9 times. Maybe I will get lucky. Holy shit. Is today my lucky day? It almost wicked me out. It almost wicked me out. That's crazy. Dude, if this ends up working for me, I guess this might be my new lucky shirt. It might be my new lucky shirt. I just need these wicks to break down. No, for as much as I got lucky there for a second, it quickly popped. Yeah.
Order filled.
That one knocked out, but hey, you gotta protect your downside. And I don't mind that right now, especially because it's still holding 6,400. If I saw the S&P 500 getting beat up below 6,400, if it was clearly not holding this level, I would have probably given it a little bit more room. But as long as it is holding, I mean, for all I know, we had higher highs and higher lows. We went to lower highs and lower lows. If this starts to push here, it could be a whole nother trend reversal. And obviously, I don't want to be caught up in that. One of the beautiful things about trading futures is there's no pattern day trading. You can trade as many times as you want in a day. So if I see this start to fail again, guess what? I can trade again. Like there's no harm to me. I can trade as much as I possibly want. And obviously, I'll just be very, very closely paying attention to this level. Very closely paying attention to this level, to see if this is actually going to hold. And I know I probably even in chat, I could look over at you guys and some of you are going to be guessing the breakout, guessing the breakdown. And it's fun to guess it. Like if you get it right, whatever, I do it too. Like you might be hopeful for this, that, the other thing. But in terms of does that make it good trading? No, not at all. Because no one in this planet can tell you if this is going to bounce or not. No one can tell you if it's going to break down. All the best traders in the world are looking for positive expected value setups, good risk reward setups where you believe that the accuracy and really the entire dynamic of risk and reward is good enough for you to put your like earned capital on the line. And if it's not there, it's just the discipline to literally do nothing. That's it. Still the eval promo, yeah, it lasts for today's the last day. So if you want an Apex account, if you want to trade with someone else's money, today's last day. Use that code Goonie to get 90% off. And on top of that, I'm giving away 5 of those accounts today. So if you want to, it's free to enter. All you have to do is like, retweet, and follow the Twitter account. It's in the description of the video. My mod will put it in chat. But also, whether you are a winner or not, you can take advantage of the 90% off. They rarely run deals like this. And when they do, I buy a lot of them. Because why would I not? I mean, 90% off. It's dirt cheap. Dirt cheap. So it does end today. Today's the final day. I want everyone to know it. You have 16 hours left. Use that code Goonie. And then also in, I don't know, maybe 10, 20 minutes, we're going to be running this giveaway. So you still have time to like, retweet, and follow. You do have to do all 3 to be in here and just basically do what these other people are doing. And we'll rock it from there. And in the meantime, I am waiting to see... Well, that's a bummer. I'm waiting to see if I can get involved. I guess I could have quit after that first trade. So right here, in terms of like what easy ways to identify a trend, well, there's many tools at your disposal. You could look at MACDs, you could look at RSIs, you could look at stochastics, you could look at EMAs, you could look at SMAs. Though these are all different tools, and I'm not saying one is better than the other. They're just different tools, and you have to know when to use the tool appropriately. But there's a lot of ways to define trends. So for example, all this price, I'm on the 500 tick on NQ, we're above all the EMAs, the 5, the 20, and the 50. That's what these 3 colored lines are. Fuck. Do I really want to take another stab at this right now? Is this going to be another like fake out VWAP breakdown, or is it going to save itself right there? Hang on. The flow, that's not looking good. Mag 7 showed a little bit of life, but the SPY didn't. The SPY is testing right here. I think I have to get involved just in case this vomits from here.
Order submitted.
All right, hang on. Then I'll go back to my explanation. Sorry, I got distracted for a second. Exactly what I told you I was looking for. SPX's failure at 6,400 is what was happening. So I decided to execute the trade via NQ, but really what I did was right here. Lower highs equal, or lower highs, then we got equal highs, but we got lower lows. And I literally told you what I was looking for. Like exactly what I was looking for minutes ago. Rewind the stream. I said, if this fails, I want to be involved. And that's exactly what I got right here. And before you know it, with a little bit of luck, I might be able to scale out of my first one at the recent low of 1016, playing the VWAP failure, playing the failure 6,400. This scale will probably get me back to break even on the day. I'll move my stop to break even because I'm trying to scale. I went short 2 contracts, so I want this to get hit. When ideally that gets hit. And once again, I'm just using the recent structural low. As soon as that's hit, I'll move my stop to break even, and then I have another freebie play. I want as many freebie plays as I possibly can get. Today, you saw that my first freebie play got stopped out for break even. Remember, that happens about 66% of the time, about every 2 and 3 times. So maybe I'll get lucky, and this is the 1 in 3 times where I catch an actual trend. So we'll see if it happens. Maybe the market bounces from here. I don't know. Maybe a bunch of buyers want to step in. That's totally possible. Maybe it'll double bottom on SPX. It's looking pretty weak to me when I look at the flow. The options flow tried to pick up from 1016 to 1023, getting hit again. Specifically, it is call selling. So if you are currently riding 0 DTE calls, Hey, I'm not your mom. I can't tell you what to do with your money. You're in charge of your own money, but I can tell you the larger players are starting to sell their 0DT calls. The 0DT call delta is definitely dropping. Definitely dropping. So we already saw this structural breakdown right there in the SPY, and then we're waiting for that to occur in the Qs if it does. The Qs on a relative basis, intraday have definitely been stronger. Nvidia is already giving it back. The Russell's starting to get cracked. Bitcoin had a nice pop going sideways. It's actually holding pretty decently. Palantir is actually in the green. Palantir officially went green. Nvidia, the world's largest stock, when that's down 2.4%, that's brutal. That's absolutely brutal. The market is looking indecisive. So I try to play this, but it did make a fresh low. It cracked the 1016 low, but it's not vomiting. We're not seeing that cascade all the way back down, at least not yet. And then the NASDAQ is just getting pinned to its VWAP. It's getting pinned to its VWAP. All right, we'll see how it plays out. I would love, once again, my most stressful moments are before I can lock in this first one. As soon as I lock this one and move the stop to break, even at that point, I really don't care because I'm like no longer risking anything. And these are always bummers because we overshot 200. We got down to 95. I was just targeting the recent technical low at 87, which obviously we have not hit yet, but maybe I'll get lucky here. Maybe I'll get lucky here. Come on. Come on. Can we crack 200 again? Where are these buyers? Okay, so I'm actually getting protected by the fact that there's a shitload of sellers up at 220 right here. So that is one thing that is currently helping me. Remember, this heat map, if it's dark above right here, you could see 75. That's a lot of sitting passive sell orders. And if it's dark below price, that's a lot of sitting passive buy orders. So buy orders below, sell orders above. These are passive orders. Passive sell, passive buy, and then the bubbles on the chart are your aggressive buys and your aggressive sells. This isn't someone hitting the market. And so when you see the green right here, that means that the buyer traversed the spread and the trade went through on the ask. And when you see the red, that means the seller traversed the spread and the trade went through on the bid. So that's like the technical definition of it. What you really need to know is like what we just saw. That's aggressive buying. When you see that green, aggressive buying. So they filled all those orders, ripped it all the way up to the point of the control. And that's the POC. That's this yellow line, POC, point of control. That's just where the most volume has been traded at, like what particular price point the most volume has been traded at for that session. That's the POC, the point of control. So as you could see right at whatever time that was, 10:28, 10:27 in 30 seconds, we ripped through all those sitting sell orders and they actually got filled. That person didn't pull their orders. They actually got filled. So someone aggressively bought that at 220-ish, roughly, give or take a little bit. Fuck. We're range bound now. Are we getting all right. So as much as we were nicely trending, now we're just range bound. And I'm just getting wicked the fuck out. Yep.
Order filled.
So before you know it, we had a nice trend up, we had a nice trend down, and ever since this 10:01-ish period, same lows, same highs, range bound, the worst fucking market to be involved in. Even this little fake out breakdown there, but overall, you could argue that it's just range bound. If you need an example of how shitty range bound trading is, you don't have to look much farther than here. I'll show you the 10-minute. Literally what we did all day on Friday. On Friday, we sold until about 10:10, and for the rest of the day, just sideways. Now, am I telling you that's like how today has to go? No, but there are periods, there are certain trading days where you have about half hour to an hour worth of movement, maybe 45 minutes worth of movement, down, and then from 10, all we did was grind sideways. It was, if you paid attention to the market on Friday, you know very much of how fucking painful and shitty it was. So could this happen? Yeah. Could we still kind of revert? Maybe, potentially. All I can tell you right now is the NASDAQ is sitting above and sitting below VWAP. It's battling it out there. Looking at SPX, we are just at this seemingly never ending battle at 6,400. And you just have to have patience. You just have to have patience. Spot Gamma SPX dip bot driven by looks like October put spread covered and later 0 DT calls bought. Very quiet after this. Things remain unstable below 6,400. That's why 6,400 is so telling here. And like, what's crazy about it is as much as this battle's going on, if you can, as a trader, catch the proper trend off of 6,400, whether the bulls protect it and we bounce, or the bears end up, cracking it, you're going to make a lot of money. That's the entire point of keep your losses small, because when you can catch that trend, it's such an outsized return that you're fine anyway. Like you're completely fine anyway. So it's just, sometimes it's always going to come back to, can you protect your, do you have the discipline and system in place, the mental system and also the trading system in place to protect your downside? Dude, how many times is this going to put me back into the position? This is so fucking brutal. Do I do it again, or do I just say, you know what, not today? I kind of want to be a little bit more aggressive just because we know that Apex is running the 90% off deal. So like if I can take a big shot today and if I could get it right, I can make a lot of money. And then my risk is low because the accounts are 90% off.
Order submitted.
We'll see. We'll see. To be clear, also in terms of risk management, what I just did, taking on double the unit size, you would never, ever, ever mathematically, conceivably, ever do that with your own funded account, because you should never be breaking your rules. The particular mathematical reason of why I'm like arguing for this now is if there is a breakdown, I could probably pass these tests today. But then if I'm wrong, because of the 90% off deal, it's so dirt cheap for me to buy new accounts that I'm willing to take on that risk. So to clarify, what I just executed, a trade that is 2 times my normal size, I only exclusively did that because of the 90% off deal. I want to be very clear. You would never, ever break that type of a rule when trading your own account. It's just like literally, I figure if there's a day to take like an outsized swing, it's today because of 90% off, and I could just buy them. Like honestly, I don't even know if I would want to really do that on like the 80 or the 71% off deal. So it's just looking at like the full dynamic of it all.
Order canceled.
Okay, so the bot closed its trade. The bot just closed its trade on that. Wait, did it close its trade? All right, now we're watching this low. So the Qs are picking back up here. So you could argue from 10:16 to now, and to clarify, the bot closed its trade there, and I have my risk at this intraday high, or not the 10:29 high, which is the second high of the day, which we are getting very, very close to. But anyway, we had higher highs and higher lows. Then we had a little bit of a pullback, lower highs, lower lows. Since then, it's weird because it's divergent. So the SPY, if you look at the 1026 candle, the SPY made a fresh low, but the Qs made a higher low. So there's a bit of divergence between those two. Side note, Palantir keeps climbing like no other. And Bitcoin's actually looking somewhat decent as well. But if where is this? Basically, I'm trading all of those accounts. So I'm looking at 565.26 on the Qs. That's the risk for the swing. And like I said, it's definitely an outsized risk, but it's weird when you think of sim defunded because, okay, how are you defining risk? Are you defining risk of the trade account or how much the trade account costs you? Those are two very fair forms of risk that you should be considering without a doubt. But they obviously have different implications. Oh, how are we here? 5 minute is trying to push bullish, but it's struggling. 10 minute is trying to push bullish, but it has actually not even hit that 50 EMA. 30 minutes bearish, 4 hours bearish. 5 minute is trying to push bullish. 10 minute is testing right here. and then 30-minute is still bearish, 4 hours still bearish. So the medium time frames of the 30-minute and the 4 hour on both ES and NQ are dominantly bearish. 5-minute on both is technically bullish, and then the 10-minute is like kind of the suspect one of like, does it actually want to push or not with respect to ES and NQ. But right here, Jesus. I mean, they almost cracked 6,400 and then they saved it. Looked like it was going to puke again. They saved it again. We're still range bound. This really we had a little bit of an outsized reaction to that data drop at 10 a.m., but you could argue we've been range bound since 9:52, like literally before the turn of the hour, excluding the market's overreaction to the 10 a.m. data. We had about 25 minutes worth of movement today, and ever since then, just nothing. Like absolutely nothing ever since then. So that's an important thing to recognize as well, of like when you're just not trending. Without trending, of course you can make money, but you're going to make money by you're going to make way more money by selling premium in a non-trading market, especially when vol is elevated, versus this. Like if you try to day trade from 10 a.m. till now, if you try to day trade calls or puts, you've probably gotten your ass handed to you because just nothing's going on. Nothing is going on. Believe me, call now. SPX next week, all-time high. Based on what? Remember, there's a huge, huge difference between what you want to happen and what are you basing that off anything mathematical, or are you literally just saying it because that's what your positions are and you got like tricked into going long? Is that what's going on? Because if so, I believe that. I believe that you might be talking your own positions. Hello, Matt Kohrs. Could you advise on how to source a trading bot? Yeah, you build it yourself. The best way to source it is to go out and build it yourself. Best way to do it. Best way to do it. Tesla had strong indicators 2 weeks ago for a very big gain in mid-September. I disagree with that wholeheartedly. Tesla bearish delta. Tesla extreme 0th percentile delta, a drop of 577 million. Strong downside positioning. Like literally statistically insane how negative the delta was against Tesla. There we go. Is this the time that we actually like crack? Or no, are they just going to buy it up again? Oh, it's range bound. Here's a look at the options flow. The SPY's all over the map. We did nothing. We dropped, we popped, we dropped, we tried to recover, it dropped again, then we popped, and then we dropped. Like it's all over the map. The Mag 7 had a big pop, gave some back, and going flat ever since, along with price. So no clear trending movement on the Mag 7 as of now, and same thing with the SPY. I think it's coming back. I mean, the NQ is just getting pinned to VWAP. And then also, if you look at SPX, we're just back to 6,400. This is the test. Above it, the bulls have a chance. Below it, the bears have a chance. And we started way below it. The bulls fought like hell to get it up. Then we kind of like oscillated down and then up and then down and then up. And now we're just at it. So it's kind of, I don't know, in a weird way, you could probably look at do we take out that 10 a.m. high at 6412, or do we take out this, whatever, the 1026 low at 39 or 63494? Sorry, I completely fucking butchered that. 6,394. And right now we're roughly halfway in between. We're right at the key level. We could watch recent highs, we could watch recent lows, but it's all going to be dependent on the big traders about to trade. Are they going to do anything today? Is it going to be range down? Are they going to buy? Are they going to sell? If you're trying to predict what they're going to do, you're not playing the game right. All you should do really is just wait and be like, okay, cool. I think I have a good risk reward opportunity either to take advantage of it or to not take advantage of it. Keep it simple. 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 Oh, we have a little bit of movement here. Come on. Are we going down to this? As of now, the SPY Delta flow is starting to take a hit, folks. Is this a good time for me to actually put in a trade on my Vanquish account? Okay, Vanquish puts buy. We'll get 10 of these. We'll do a market. All right, I got to fill at 1080, 1180, 1230. All right, we're going to see if we can lock in 1500 on that. All right, I'm in. Oh, we're locking in some money. We're locking in some money. We're locking in a lot of money now. Holy shit. All right, we're cooking. We're cooking, we're cooking, we're cooking. Come on. We're really cooking now. Holy shit. Do I just, like I said, do I just go for it big time this time? Just go for the 9? Dude, sometimes it works out. Sometimes it just works out. All right, I should probably put the stop to break even. What am I at? I think this is the max I need to go for. Because I locked in 1.1. So if it goes a whole 100 points, I should be good on those accounts. So yeah, no, now I'm like actually fucking crushing it. So that plays up 3.5 per account, which means basically break even, a little bit more of a push. So it just needs to take out this recent low. Got a lucky break. Got a lucky break. This didn't lock in yet. So I bought puts on my Vanquish account, 6390. I'm in at 1080. Didn't get a fill yet. I'm up a little bit. I just need this to puke. Oh, it did puke. Fuck. I was a little bit slow to react. Had I gotten in earlier, the puke of this recent low, it would have been good. So now I need it to go probably to 88 to get my fill. Probably need it. Oh, almost got my fill. I'm trying to lock in 1500. Come on. 950, 1000, 850, 550. It's going the wrong way. 650. 750. Yeah, we'll just come back to it, see how it plays out. All right, we are going to be doing a giveaway today during the stream. It's in the description of the video. My mod will put it in chat, or you could just go to my Twitter account at Matt_Kohrs, Kohrs. Like, retweet, and follow. That's how you could get entered into this. It looks like 65 of you already figured out how to do it. Like I said, 74 of you figured out how to do it. Like, retweet, and follow. We're going to be doing that I'll give you 5 minutes. We'll do it at 10:50. I'll give you 5 minutes to figure it out. Also, obviously, by the way, this deal from Apex ends tonight, 90% off. 90% off with that code Goonie, GOONIE, 90% off. Ending today. Use that code Goonie when you're checking out to get it. They don't run deals like this. Did I get a fill yet? Shit, I'm getting so close. 1,200, 900. It's like right there. Come on. Come on. Bada bing, bada boom. Order filled. 1,500 locked in on that account. That's looking good. That's looking real good. Obviously, crushing it on these right now. I'm up about 3.8, so right around 80-ish is where I'm break even on the 150Ks. But then on my 50K accounts, I'm actually doing even better. On the 50K accounts, I've locked in 1.1, and then I have another 750 running unrealized. And for me, I have the price target all the way down here at 19 because that's a perfect 100-point gain, which is about 2K, and that's exactly what I need to pass these tests. Remember, it is 1 day to pass, so I actually might pass all of these tests and all of these tests together today. And then that brings up the interesting question of which one would I pay for to actually do it? Dude, I am fucking annihilating it today. I am annihilating it today. 100 more points. I just need that. Wait, is that 50 points? Dude, am I going to get it? What a day. It started off a little questionable. I'll admit it. 1.5K locked in there. Ooh, giant iron condor. It looks like is currently in play. A giant iron condor. Someone has a call credit spread at 6,430. This is a fucking huge iron condor. If you don't know what an iron condor is, it's a combination of a call credit spread and a put credit spread. When you have a call credit spread, you're betting on the closure of the market session being below that value. As in, this player wants it below 6,430. That's for a call credit spread. For a put credit spread, you want it above it, as in above 6,345. So basically, when you put it together, when you have a below bet and above bet, they want it within this region. They want the market on SPX to close below 6,430 and above 6,345. They want it somewhere in this region, and that's a lot. 26,000. That is a big bet. That is a big, big bet. Millions of, and that's a 0 DT. It's expiring today. Holy shit. That's crazy. Well, we'll see if they blow out or not. We'll see if they blow out or not. Oh, how do I want to handle this? How do I want to handle this? Do I want to move my risk down? Dude, these are cooking. 6.5K net up. Dude, I am murdering today. Absolutely murdering today. Look at all that money. Look at all that green, team. Very quickly losing its footing. So the range that we had obviously getting broken. Obviously getting broken. And now it's the fun question of, will we break the intraday low? Will we break the intraday low? Stay tuned to find out. SPY Delta is puking. Mag 7 really, it all started puking at 10:40. Oh, speaking of that, okay, you have one final minute. We're giving away 5 different Apex accounts. All you have to do is like, retweet, and follow. It's my pinned comment at Matt_Kohrs. If you don't win, or if you win but you want more, don't forget today, 90% off. It's the last day. This is your best opportunity to get in for dirt cheap. Code Goonie, 90% off. Dirt cheap. All right, Twitter picker, giveaway picker. Is this what I used last time? Yeah, the X picker. Okay, close pop-up. Okay, did you guys figure out how to do this? Is it 10:50? I got to be a man of my word. All right, so we got to do this. I copy that URL. All right, you had to like it, retweet it. You had to do both. All right. Like, retweet, must multiple accounts allowed. Please enter after each. Must follow at Matt_Kohrs. That is me. All right. And we're doing 5. All right. Let's see if you guys are lucky enough. How do I run it? Pick a winner. Here we go. Drum roll, please. 3, 2, 1. Searching. All right. There. If you are William Jackso, Elon Muskie, S. Rod, C. Derry, or the Shan Sun, you are the winners. So I will be reaching out to you. Let me screenshot this quick. Let me do the old screenshot just so I don't forget. But congrats. If you happen to be watching right now, awesome. I actually know 3 of you. I recognize 3 of the names. I recognize 3 of the names. So congratulations to William Jackso, Elon Muskie, S-Rod, C. Derry, AMC, and the Cheyenne Sun. So right here, Jeremy Jackson, Bot. Oh, congrats to Bot for winning. Seth. Right there, dude. I'd love to see it. And the Cheyenne Sun. I also, yeah, look at that. All right. Well, you guys all, congrats. I'll be reaching out to you. I'll be DMing you the specialty coupon code today so you can get that free account. Now, if you happen to be one of these winners and you want another account, or if you didn't win and you still want an account, remember 90% off pinned to the top of chat in the description of the video. It ends today. Use that code Goonie to get that 90% off. Speaking of which, dude, I'm up 6K and running, but net 2.5. So really the exciting one is this right here, where I could actually I might be able to pass all 40 tests today. That'd be something. I just need this. These tests will pass if I get it to 119. I just need it to 119. I guess being extra aggressive ended up paying off today. Come on. Should I put my stop to here? 62. That's another 40 points it'd be off. These ones are about to pass. You pass at 3K profit. I need another $500 per account. 500. 40 thought you could only have 20. You can only have 20 PAs. So I'm at that point, I would have to decide what I want to do then from there. I would have to decide. I'm really tempted to move the protective stop down, or do I just let it ride and be like, dude, either hit my value or don't. I don't care. I don't know what to do. I don't know. Well, that was a fun giveaway. Got some winners in there. Congrats to everyone. Congrats. All right, maybe we do the 5-minute on all this stuff. Bitcoin is holding on decently. Got this nice pop. I'm a little bit worried, though, that it's not going to hold because we're starting to see some weakness creep back into the system. The bulls made an attempt here from 9:35 to 10. So they put in 25 minutes worth of effort, and it's just simply not holding anymore. Same thing on the Qs. Like the bulls tried to fight back today and they just couldn't, man. I mean, options are starting to get look at the Mag 7's just bleeding here. I wouldn't be surprised if at some point we go back down to testing this intraday low. And really the telltale sign was SPX not holding 6,400. This is the line that the bulls very much needed to defend from a psychological level, from a price level, from an options level, and they just didn't. And now it gets really exciting because right here, Captain Condor is back at 26,000. If we start to press one of these bounds, whether it's the bullish side at 6,430, we could really get going. Or if we, on the flip side, end up pushing 6,345 and that snaps, then we can really, really get going. So the way mathematically these iron condors impact the market is it very much increases the odds of you closing in those because you're going to have resistance, you're going to have support. But there's these tail effects where if they snap, kind of like a rubber band, when it breaks, like rubber band, most of the time you're going to be fine and you pull back to it. But if you snap, you're going to have a release of all that kinetic energy, for lack of a better metaphor, and then you could really get going. So once again, the odds are now increased that we will be within these bounds, but if we do snap, it actually increases the velocity of which we will like kind of leave from that particular orbit. So once again, if you're watching SPX, you should watch 6,430, and on the downside, you should be watching 6,345. And it's literally a 99.6 percentile play in terms of size of the past month, as in we don't see bets of this size. This is actually kind of fucking nuts how big the bet is. Kind of nuts. Palantir went green. Nvidia's deeply red. Tesla's holding. Shout out to Palantir for going green on the day. Shout out to P tier. I'm still in this. We had an aggressive sell-off. Now we're just kind of going flat. Obviously, if it snaps this recent low that we saw at 1052, 1055, I should be good. It should puke to that level and I should be able to lock in my profits. But no, basically all 40 of my accounts are currently up about 2K. Some of them, this last one I've scaled out enough. You can see profit target, that I only have one runner, but on these ones, I'm still short 4 contracts. So about 6K per account. Oh, brother, 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 oh, brother. Oh, and then obviously on Vanquish, that one hit. So I'm only $430 away from where I need to be to pass this test. On this one, I have an advanced options account on Vanquish, and I'm very, very close to passing. So that's not bad at all. Today is Turning Up Mateo. All right. If you are a winner, one of these people, if you see your name, I'll be reaching out to you right after today's show to get you that code. Don't forget, Apex 90% off today. You have 16 hours left. It ends. Use that code Goonie. And then also just what we were seeing of like this large position. SpotGam is giving it away free all the way up till September 5th to see if you, I recommend you trying it out before paying to see if you like it. So definitely give that a little peek, if you will. And I'm just wondering, is this about, we're flat now on the Mag 7. SPY is picking up a little bit. NASDAQ did puke, picking up a little bit. Tesla popped, giving some back, but now pretty much flat. Nvidia popped and then dropping. Palantir actually showing some bullish aggression. Microsoft, a little bit of bullish aggression. Apple did pop and then starting at 1040, a clear drop. Netflix, I don't even know what the fuck to call that. MicroStrategy, actually a nice pop. Meta, a nice pop. Avago, ooh, ugly. AMD kind of popped and now flat. Robinhood dropped and now flat. And then the Russell, really, really messy looking. Really messy looking. It's pretty much the skinny on the situation, folks. Pretty much the skinny. All right, well, that's all the major stuff I have for you. Well, no, I could hang out a little bit to see if this trade hits. I kind of want to stay with you guys to at least see 20 of these. Dude, 6.5K and ripping it. But this is what I really want to lock in right now. I'm tempted to move the stop down to 66, this recent high, or maybe even do it to 91, because then that will 30 points. That's at least 600 more. 600 more will put me at 1700. So I'll be over the halfway mark in the worst case scenario. Okay, so part of me is tempted to do that because no matter what, then I'm halfway there. Or the other part of me is tempted to literally just leave that profit target in, delete the stop, and just basically say, hey, either I'm hitting it or I'm not. Either I'm hitting it or I'm not. Matt, some DGen evaluations looks like it's stabilized over the last month. No, it hasn't. Over the last month? Are we looking at the same charts, dude? You're calling it stabilized over the last month? The same exact time period that we ripped to a new all-time high and then 2 days later puked to breaking a recent low? You're trying to pitch that to me as it's stabilized over the past month? Are you sure you're just not seeing what you want to be seeing? I feel like you're basically talking your own book and you just very much want that to be happening, which is a huge difference than what is actually happening. You have a little bit of a bear flag here. If this were to snap, we might just be putting in a low. Like it did puke pretty hard. 1, 2, higher low. This is our first higher low there, but is it just going to snap? It's over the EMAs. VWAP is all the way back up at 23,220. How far did we puke? We puked down to 36, so about 85 points. Yeah, the next question is where's going to be the next high? Is the next high a lower high? And then we clearly have lower highs and lower lows? Or is it going to rally enough that the next high is above? And then we have some like larger warning HYMC breakout. The fact that you're talking about piece of shit mining companies tell me that you are 100% a massive like net loser in your trading career. HYMC. Like, come on, dude. That is, people have said dumb things in here and you're pitching dumbass mining companies who don't actually mine anything. Like that's your giant pitch. Like, come on. The fact that I'm seeing that, like, I literally could bet my entire net worth that you are a net loser as a trader if you're getting duped into those types of situations. Like, there's some plays that are just so evidently dumb fucking scams. And then when people fall for it, like, it's actually so bad. Like, you know, sometimes, whatever, the telemarketers and stuff, and you're like, who falls for this? Like, it's just so obviously a scam. And then you hear like the super sad stories about like old people who are maybe just like not best with the technology or something like that. And they end up like giving away money to like some random dude in like Bangladesh. That's how this feels when it comes to the stock market. When I see dumb people talk about shit like HYMC, like, man, they're gonna be mining so much, like blah blah. It's the exact same feeling. It is literally the exact same feeling where you just have to question, like, how did people fall for this? How did he fall for this? And then they do. And it's sad because, like the old people getting scammed by telemarketers, these people are getting scammed in the market. It's ridiculous. Absolutely ridiculous. So yeah, don't do that. 100% do not do that. Palantir is looking good. NVIDIA is looking weak. SPY is looking weak. Qs are looking weak. SPY's stronger relative to the Qs, but the real level here is 6,400. If the SPY can hang out above it like it tried to today, like if it can actually recapture it and chill up here, it has a shot. The longer it stays below it, the worse it's going to get. We do have lower highs, lower lows. This is the recent high. This is the recent low. It's pretty easy. If it breaks, you're watching 6,400. If the downside breaks, you're probably first watching 6,375, and then really you're watching the intraday low at 6,369. But what I find interesting is where did it go? Right here, the bottom side of the Captain Condor, the put credit spread. Once again, that is 6,345. Very important for you guys to all watch that today. 6,345 right here, right in this zone. That's going to be very, very important on the puke and snap of not only this recent low, but probably that will lead to the test of the intraday low, which would then lead to a test of that put credit spread getting examined. Remember, the fact that that position was played increases the positive gamma. It increases the mean reverting nature of where we currently are. But on the snap, which is now statistically less likely, in the rare event that we do snap, it would increase the magnitude of which we rip away from it. And so we just got the bear flag breakdown. That if you took that trade, this breakdown here at 57, risking the recent high, about a 25-point risk. It's a large risk. The ATR is picking up, but that was a good trade. I don't even know how it's going to play out. I'm just saying you waited for a short-term trend reversal to go back in phase with the larger trend. You had well-defined risk. That's a great trade. Obviously, I didn't take it. I'm already in a position. But if you took this breakdown trade at 1104, in my book, that was a smart decision. Does a smart decision mean you're going to make money? No. It also doesn't mean you're going to lose money. I don't know. Good decisions can make or lose money. That's not in your control. What is in your control is waiting for those setups. So I think if you took that breakdown at trade here at 1104, roughly, give or take a minute or two, like you should be patting yourself on the back as long as you handle your risk appropriately. As long as you are, hey, yeah, this is my risk, and you stick to it, you lock in on your initial movement, and then you set the stop to break even, like do that type of a thing. But that was a good technical trade in phase with what else is going on in the market today. That's a good trade. That's a good trade. That is a good trade. Going down to 23,080s on NQ, Matt. Maybe no one can definitively tell you that. You might have a guess. You might be guessing that. But, dude, these are all cooking. These are all cooking right now. We are cooking. Come on. All right, we just hit these lows here at 35. Are we going to get a puke fest? There's some buyers at 30. Well, there were. And now they drop. They just keep dropping. They just keep dropping. Oh, the CVD is negative, getting smashed. A lot more bearish action today than bullish. I just need this down another 10 to 15 points, and then I could get my fill. And then I will pass half my test in one day. If this can hit 19, for the 50K accounts, all you need is 3K in profit. And I'm like, oh, wait, is my math wrong? I'll move it up a little bit. All I need is 3K. They started at 50K today. You guys have witnessed every single trade. I just need a little bit of a puke there. And then these ones, I need 9K in profit. The big boy accounts, the 150K accounts. So that one I need a bit more, to be fair. Those ones I need about 6 more K. But if I get a puke, it should happen relatively rapidly because I am trading 4 contracts. So I have a locked-in loss of 4K. I have an unrealized runner of 7, so it's netting out to 3.5. But what I'm kind of bummed about is this. How close did I get? 25. It bounced off of 25. Moving that up to 22. Come on. Show me the money. Show me the money. Show me the money. Come on. Show me the money. I don't want to let this bounce all the way back up to 80. That's a 40-point bounce. That's $800. Why can't the market just make my life easy and lock this in here? You know? Why can't it just be like, you know what, Matt? Good discipline today. You were a little bit of a degenerate, but you took it on at a good point to take a bet. Like, why not? Why can't old Mateo win one of these? Sellers here at 45. Sellers there at 45. Come on, just smack it. Smack these guys at 45. Dump it to 25 so I could get my fill and move on with my life. I have things to do today. I'm a busy man. I can't be sitting here watching the 1 minute chart all day. Come on, just give it to me. Give me the money. Give me the money. Come on. We're already 9 minutes over on the show. This is bonus content. This is normally what you get in the OnlyFans. Me screaming at the final position of fill. Oh, come on, come on, come on, come on, come on, come on, come on. Just puke. Quick, just a quick little puke. What's a quick puke amongst friends? You know you want to. It wants to take out 33 right here. We just keep bouncing off of all these sitting buy orders at 35. So sitting sell orders at 45, a lot of sitting buy orders at 35. So 35 to 45, we're in this like little 10-point purgatory right now. Come on, snap it. Snap it. Get him. Get him. Get attack. 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 For the kingdom. Attack. There we go. Knocked him out. Knocked him out. Took care of that guy. Took care of that guy. That jabroni. All right. Now just give me my fill. Now just give me my money. Now just give me my money. Come on. Come on. Just fill it up. Fill her up. Fill her up. I'm at 22. Oh, what the fuck was that? Someone came in right there. There's buy orders now at 28, and they just took out those sell orders at 45. Just buy. Sell. Yeah, someone came in right here. Good chunk is sitting buy orders right at 28, just above that recent low, which was around 25. So front running it by about 3 points. So not on this rotation. Oh, I did move my stop down just so in the worst case scenario. I'm still like way over halfway. Why can't this just make my life easy? Just give me this quick fill here. All right. Yeah, dump it. I'm only $300 away. Come on. It's just this last little bit has been such a pain in the ass. This like last little movement I need. All right, they just took out. All right, so they have these buyers are still here at 28. All right, 28. Someone came in at 31. They're filling them at 31. Yep, bounce right off of that. That's quite a few buyers. Bounce right off of that at 31. Oh, 31, 28, and 20, with the most currently being at 31, but obviously the situation is pretty dynamic. How's the options flow looking? How's the options flow? Oh, Mag 7 is puking, clearly. SPY, puking. Yeah, buddy. Buddy, buckaroo. Come on. Piper did fire, so if you're in here, let me give you this. What is today? September 2nd. All right, if you're in the Discord, Piper just fired to give you an idea of the bias on the day. Come on, give me my fill, give me my fill, give me my fill. You son of a bitch. A point, oh, seriously? Is it going to be one of those days? I was a point away. It goes to 23. My fill is at 22. Don't do this to me. Don't do this to me. Are you fucking kidding? Why does it always feel like they do this to me? At a certain point, it starts to feel personal. It feels like the market's like, ha 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 ha. But imagine if. Wouldn't it be funny if? Like that's, oh shit. That's the vibe I'm just always getting. It's just like a point away. One point Mateo. One tick Matt. Seriously. This has been sitting here for how long? One fucking point. Uncanny. Unfucking canny. Basically, I needed the Qs to go down like 3 cents would be the equivalent. If QQQ had dropped another 2 to 4 cents. I could have gotten that, Phil. Come on, dude. This is getting abnormally painful. There's not even that many. The buyers are down here at 110. I'm not even like being stupid and putting my order on the other side of a big chunk. Here we go. There we go. Okay. There we go. 3,000, 3,000, 3,000, all locked in. So all of these accounts passed. And then I have this running. I'm up about 5K. So I actually might be in the situation of passing all of these today. So I locked in a 4K loss, but I have a runner of 9K. So I'm net up 5 on all of these. And then all of these ones locked in. This is the type of degeneracy that you could take advantage of. Obviously, when they had that 90% off deal, which, hey, maybe I got lucky, maybe I was skillful, I don't know. All I can tell you is I passed those tests, and I might be passing an entire additional chunk. So that's what I have for you. Congratulations to all the winners. Don't forget to check out that Apex deal when you're checking out code Goonie, 90% off. It ends today. And then the Spot Gamma deal is ending on the 5th. So if you want free access to their daily breakdown of what's actually happening in the options market, it is free up until the 5th. Highly recommend you guys check it out. All the information is in the description of the video. It's pinned to the top of chat. And of course, if you have any questions, comments, or concerns, you can reach out to me, DM me on Instagram, DM me on Twitter, email me, media@MatthewKohrs.com. I can do my best to assist all of you. And if you want to hang out with a group of like-minded traders, that's what the Goonie Trading Discord is for, also in the description of the video. The plan is later on today, we'll be posting an update video of all the major things you need to know that happened today and also what to look for tomorrow. And then we'll be streaming once again tomorrow morning, 9 a.m. bright and early. Don't forget to like, subscribe, turn on those notifications, and we'll catch you later. Hope you make a shitload of money, and remember, stay disciplined, stick to your trading system, and you will make them tendies. Peace.